What's going on, traders? Yes, I made it, and I got the one and only, the Chrisopedia with me. What's up, man?
What's up? It's great to be back with you. Excited to be here on Money Mitch and have this duo back together.
Yes, definitely. The dynamic duo is back. You already know, Super SPAC, man. We're going to come at it. We're going to talk a lot about today, what's been going on in the market this week. I mean, a lot of it started with Omicron and Omicron. I keep on saying, I don't know why. Make it a transformer. Let's just say.
Yeah, I keep spelling it wrong in articles, saying it
Oh,
wrong.
good
Yeah,
Lord. It's
it's a
been like
tough
that.
one.
POWELL ending, transitory,
Yeah.
CATHIE Wood, Ark Invest, market correction, stay at home stock, growth stocks. We'll talk all about it, guys. You guys don't forget, put your opinions in the chat. That's what this show's really all about. Let's go ahead and get Money Mitch Happy Hour started.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
All right. Let's go ahead. Let's get this party started. So, like I said, you guys in the chat, feel free, give your opinion because that's what this show is really all about. You know, the market's closed now. We're not going to really be trying to trade positions. At least that's what this show is about. This is more along talking about what's going on out there so that we can start giving opinions, hear from different perspectives. And that's why I brought on Chris today with me. So let's go ahead. Let's get started first. Omicron or Omnicron. I don't know which way I want to say it today, but let's go ahead. What do you think when you first heard the variant news, and what do you think it really is going to affect the market?
Yeah, I mean, I think when we first heard of the variant, in some of the African countries, I think it was only a matter of time before we started to see, cases pop up in the US. And, I think maybe we're getting a bit of an overreaction here, but I think, we have to face this head on that it's going to cause some sectors to fall. We're going to see a cycle again. So, your cruise stocks, your airline stocks, stuff like that could get, hit harder. And then with that being said, some of your bio stocks that are related to, being COVID plays, right, have seen a bit of a run up. I read through, comments from the White House yesterday, and they're working on, adding, booster locations, testing locations, at home test. And what jumped out to me in that report, Mitch, was talking about, pharmacies being, some of the frontline defenders to help with the vaccine efforts. And to me, that leads me to look at a CVS or a Walgreens, right, as potential winners, and it's unfortunate, right, that Omicron is happening, but there is a way to, time the market and maybe make some money off of some of these trade ideas.
Yeah, one of the things that I was looking at when I first saw this was, I don't know, maybe an Abbott Labs play or something, because they're going to need to be making some new testing to find out.
Testing. That's a good one too.
Like testing. I mean, at the end of the day, that's what I think is really a nice play. I like how you brought up the Walgreens. I'm going to definitely keep that in my mind going into next week. But I think it's just getting started. And one of the things that has been mentioned, I think, we're just going to live with this forever now. I think there's always going to be another variant. That's what happens. I mean, how many variants of a flu is there out there in the world, right? I mean, I don't even think there's a count on it, as many as it's been. But really, one of the things that I could say here is the real concerning part is lockdowns. I think that's the only thing that you got to be concerned about, because that's what has huge economical and effect, right? And so from here on, is the US going to go on lockdown? I think it would have to be, and it's sad, but it would have to be really, really bad for us to go back into lockdown. And then I could think, like, maybe in Europe, maybe you'll start seeing a little bit of lockdowns, and that could happen because Europe has been a little bit quicker to pull the plug. I know that Australia was struggling for a while, and now that this is out, I think they went right back into lockdown, and they're looking to hold down the country, not, get this to an extreme. And I think that you just have to keep an eye on this, because those are what's going to have supply chain issues continue. Then next thing you know, we can have again chip shortage talk, then again inflationary talk. So I think those are the kind of things that you got to worry about. Lockdowns are the ones that affect the supply chains, and then the supply chains get destroyed after that, bringing what? Inflationary environment. So let's just keep that on watch and see what happens. Let's get into the next one. Let's get into a little bit funner topic, or should I say transitory into the topic here. So Powell ending the word transitory here, and inflation probably persistent, right? I mean, what are you thinking, Chris?
Yeah, I mean, transitory was definitely one of those words that we heard a lot this year. I know that some of the dictionaries put out their word of the year, and I saw that vaccine was the word of the year in one. I think NFT was the word of the year in another, but I mean, anyone who followed the market, transitory was definitely a word of the year, right? It was thrown around, used by Powell a lot, and now he's going to end using it. I was never a big fan of it, right? I mean, I think we need to understand and know that inflation is here. It's real. So I'm happy to see it go away. What about you, Mitch?
I mean, I kind of understand the idea behind the word when it started.
At first, yes.
Yeah, like the like maybe the first week even of it being brought up. Because what he was looking at was, okay, so are we getting a certain environment to cause inflation that shouldn't last? That was the idea, right? But I think we all were seeing it. This environment was not going away.
Yeah.
And I mean, when I started seeing that the used cars were gaining value
more than new cars,
I was like, hold on. This is not normal, Jay. Like, come on. Like, what are you looking at? Like, and this is when, you know, a lot of people start talking about how inflation is taking the data, and is it really a good measurement of inflation? And I think this is something that, you know, us as retail investors should really gain togetherness about, so that maybe we can get some better readings on economical data that maybe we could get access to see the same thing that Jay sees, right? Because he has to be getting some data that we're not getting access to for him to be thinking that it was transitory, right? Yeah. I mean, so bring that data out, right? So if that's what you're seeing, show me that. Don't just tell me that. That's what I would want to do. It felt like it was a bunch of show me and a bunch of tell me, but nothing was being shown to me that inflation was going to go away. If anything, I was going to the grocery store and being like, man, baby, we really got to spend like $200 something on groceries. Yeah. Like,
and your cart's less full.
Yes, that's the worst part.
Yeah, I feel like he used that word, and it was great at the start, but then it was like once he like dug a hole, he just didn't want to come out, and he just stuck with it. And I feel like, I mean, it's okay to turn around, right? It's okay to backtrack, and I just feel like it took him a really long time to get to that point. So I'm with you, Mitch. I like the idea at the start, but I think he waited a long time to really say, hey, maybe this isn't transitory and it's here to stay.
Yeah, it definitely was like that. Looks like Super SPACman agrees with us. Trust but verify too. Yeah, that's what I would like. At least just like, because everything wasn't pointing to the direction that he was saying. So show us what you're saying, you know? Yep. All right, let's keep going. Let's get into the next one. I think this one will be one to talk about, and I think it's going to be a talk of the next year, because next year is really going to be the determinant on what happens to Ark Invest and CATHIE Wood. I mean, we all know it. ARKK broke the 100 this week and starting to head down. The real question is, what's going to happen? You know, she was on CNBC earlier this week, pretty much doubled down in and tripled down in. I'm just going to stick with it. My question is she on some hopium here, Chris?
I mean, I think that's a good way to put it. I liked CATHIE Wood. I still like CATHIE Wood. I like the idea. I like the long-term growth. but I really feel like some of the comments that have been made recently, just don't fit the profile, right? And it almost seems like you said, she's just kind of doubling down, tripling down. At some point, maybe, some of the fundamentals of the ETFs that she runs maybe should be looked at, because, here you have where Tesla can't make up more than 10%. You're selling Tesla, where maybe that should be one that you're holding on to, and have it be a larger part of the fund, sure. And same with some of these other names. I question, she was selling, Open Door going before earnings when Zillow had said, hey, we're out, and Open Door blew away earnings. And Unity Software, right? We're hearing about the metaverse. I mean, and games, and Unity is a big player in that. And she's selling all her shares in Unity. Whereas if you look at anyone talking about growth stocks in that sector, Unity's at the top of the list. So, I question some of the moves that have been made. I saw a stat today, again, online. I don't know if it's true or not, that what was it, 29 of the 30 names were down over the last month. I mean, that's tough to do. That's hard to pick 29 winners or 29 losers out of 30. So I think part of it is dumb luck, and I think part of it is just the way she's approaching the market. And I mean, Mitch, we got to talk about timing, right? And we got to give a shout out here, right? Matthew Tuttle. And I know we interviewed him on SPAX Attack. You interviewed him right here on Money Mitch. Matthew Tuttle Capital, launched the Inverse Ark ETF, ticker SARK, SARK. Mitch, what timing to launch that ETF right before this happened, right? And the ETF really collapsed. I mean, if you look at SARK right now, the thing is just up, because it is benefiting from this. And again, Tuttle said this wasn't, disrespect to Cathie Wood, right? He likes Cathie Wood. He's in the ETFs. Cathie Wood's well respected. It was a bet against the ETF and the fundamentals of all these high growth names having high valuations and eventually, needing to kind of readjust, right? And look at that performance of what's happened to SARK. So shout out Matthew Tuttle. Perfect timing to launch that ETF. Mitch, I know you talked to him, you interviewed him. What can you say about SARK here and the timing of that ETF with ARK being down?
Yeah, one thing is that I'm glad that I was able to actually interview this ETF on Money Mitch. And one of the things that we talked about was it a personal attack? No, I mean, it was just a strategy. And I think it was Tuttle seeing, doing a little bit of forward look into the future and being like, you know what? I just don't see growth being in favor next year. And with that being said, I think this is a pure growth stock, too heavily weighted in some names that I probably could see coming down. Let's go ahead and do this thing. And always, one of the things that was brought on when was talked about on Money Mitch is that some people were looking to short CATHIE. But a lot of times you're going to have to borrow to short CATHIE, and to borrow is going to cost you. So it's a lot better to go ahead and look at the expense ratio that you get in SARK and seeing if that's going to be better for you. Of course, this all depends on your brokerage and how much those borrow fees are. But for a lot of places, it's going to be easier to go ahead and try to go ahead and long SARK than shorting the ARKK. So to me, I'm going to definitely be watching this, and it could definitely come crashing down. Let's look at ARKK. One of the things that mentioned in the chat, and I agree, that she raised a lot of money earlier in the year. She's going to need a lot of money. She's going to use it, and she could get through this, right? But the question is if you were the investors in here, because she does have some bigger investors, right? When do you pull your money out? And what could that happen? What could that cause or impact be on her fund? That's the concern now, right?
I mean, I think a lot of people, that are in those funds are betting, on a more long-term approach. And if I had my money in ARK and I was, focused on the long term, I'd keep it in right now. But if you're worried about, the next year, I don't know, at some point you got to look at maybe pulling some out of ARK. And, like I'm a big fan of the genomics ETF, right? Because there isn't another one like that. And to me, I don't know the genomics industry, Mitch, right? So I'll take Cathie's approach and bet on a basket of them, right? But when it comes to like ARK W, ARK K, I mean, I can invest in high growth tech stocks on my own, right? And I can get exposure that way. I can buy Tesla shares. I can buy all those others. So to me, I feel like it's no longer about betting on Cathie when she had the strong returns for a couple years. So I do think we see some outflows continue in those bigger ETFs. I really like what you said, though, about, what Tuttle said, right? About, people wanting to short. That's something we see. And I know you had a tweet about that the other day. We're all against short sellers, right? But it's part of the market. and it's out there, and you can make money on that trade. The same thing happens with stocks. It happens with other sectors. I mean, Mitch, remember like when Dogecoin, right, went up so much this year, immediately people were like, hey, wait, this isn't natural. This is going to come down. How can I short Dogecoin? So people were searching for articles, how to short Dogecoin, how to short Bitcoin, right? Because again, when something goes up that fast and has that high growth, it's natural for a correction or for it to come down. So again, you can make money on the way up and you can make money on the way down. And the best traders out there are going to capture both sides.
Definitely, because at the end of the day, you got to determine what you're here for, right? I mean, either you're here to be on the side of a party, and this is something that I've been talking about, and I'm not going to get too deep into this, but it's just the psychology that we're seeing out in the society. Look around you. What kind of society do you want to be in? I mean, at the end of the day, I do want togetherness, and I think that, it's a great thing to have togetherness. Chris sees it all the time, I think, in the NFT world, but also we do need to always protect ourselves and understand risk. We do not understand this. This is when we can start hurting ourselves. And yes, it's always great to have a community, but I tell you one thing, the community isn't going to pay the bills, man. And so you always got to watch out, protect yourselves, and look out for each other. But at the same time, look out for yourself.
Definitely.
All right, let's go ahead. Let's get into the next one, and then we'll get into one last one. We got about 10 minutes left, 5 minutes for each of these. Let's go ahead and knock it out. Next one up is market correction. As we've seen, the market has corrected here. The question is, do we get into bear zone here, or is this just what it is? At least what I'm thinking here, market correction.
Yeah, I mean, I think we're seeing a market correction. And I think we're going to see different sectors correct at different times. And we're already seeing that a little bit, the past couple of days with your tech and your high growth. Again, I think it's why you need to pay attention to sectors and trends, right? That's something Mitch always talks about on this show and on live trading, right? Pay attention to the sectors, go macro first, then find your stocks. I think that's a good approach. And, again, maybe, if you're worried about the market correcting, it's a good time to take a look at your portfolio and see, hey, how many of these have high multiples? How many of these are high growth? How many of these are blue chips? How many of these pay dividends? Where is my balance at in case there is a market correction? Because if you're balanced, maybe you only are down a couple percentage points or up a couple percentage points versus the flip side of being up big or down big. So I think it may be a good time to take a look at a balanced approach.
Yeah, you got to. And, one of the things that happened here, and it happened a lot. I mean, it's a lot of the basis of this show. For a long time in the kind of 2020 market and the 2021 market, story was everything. If the stock had a good outlook, then it was going to the moon. It didn't matter the technicals. It didn't matter the fundamentals. It didn't even matter if they had a car, right? I mean, let's just say, and so right now, I think you're starting to see the split of that. And so with this, we need to always try to find different variables to understand if a play is good. And so to me, that's why I started the Money Mitch approach, which was having story, but also taking a look at the fundamentals and the technicals. You can't forget about those because eventually those are going to come into play. And it looks like they're coming more and more into play now. You're seeing technicals, charts that are down. You don't want to be trading them because they're falling knives, right? For a while there, they were bouncing up 40%. So, I mean, who didn't want to catch a knife, right? But now you're starting to see the change of that. And now you're starting to see fundamentals start to make sense. Value traders come back. And so this is why we always need to try to have multiple variables when we trade. I always don't want to stick to one thing. Like, I can't just trade off of a news catalyst and just trade one way if I don't check out the company's fundamentals and the technicals. How does the company work? Because at the end of the day, we can always get into a world of pain. I'm sure there's a lot of traders out there that are in a world of pain right now. And, I don't want, to talk about that, but more along realize that we can always control this if we start trying to multiply these variables so that we don't always just get in just with one variable approach. I thought that's what really helped me change in my trading. So just wanted to mention it.
Yeah, definitely.
All right. Definitely the chat going off. What's up? What's up? Ego Shaman in the house. What's up, man? Yeah. Crazy times out here. James saying, yeah, it is crazy times. People have been trading like it's no tomorrow, right? The story was everything. And now the story is kind of changing. I mean, I don't want to talk about the bag that I hold, but everybody knows it. And I ain't afraid to show it, the genie bag. But at the end of the day, there's a lot of people holding bags right now. And just because the story was great, fundamentals making sense, I missed those technicals. And a lot of that was what? I was looking into this company as an investment long term. So I'm not worried now because I do believe in the company long term. But it just goes to show me that, hey, maybe my 3 variable approach could have saved me in this case. All right, let's go to the last one here. Stay-at-home stocks and growth stocks. I know that a lot of you probably are looking at these and thinking, what is going on? So, Chris, what do you think? Do you think that, all these growth stocks are going to go away? I mean, stay-at-home stocks, we can kind of all come to understanding that, the times have changed. But what do you think here?
Yeah, I mean, stay at home, was a great trade for a while. And, now we're kind of out of that. But I wonder with the variant if we see a little bit of a rotation there. But again, the high growth stocks, it's just, take a look at like a DraftKings, right? DraftKings, high growth, market share, right, in a growing industry. And for a long time, it was perfectly fine that they could have, revenue growth and no profits, right? Well, now all of a sudden we're getting comments, on, hey, wait a second, where are the profits at? And Mitch, I thought we didn't care about profits in this market. So what changed? So, if that's going to change, then you're going to see some stocks continue to get hit that are high growth and don't have the earnings power, right? Because if that's what people want all of a sudden, I'd be looking more blue chip then. So, I think that's worth saying. Or maybe it's the time where you need to find companies that could be considered. So someone just had a comment. Yeah, video game stocks. That's my next point. Maybe you find something that's stay at home growth and has, earnings, right? So like maybe your Roblox, right? RBLX, where kids are playing at, Mitch, whether they're at home, whether they're not at home. It's a growth play. It's a metaverse play. They got a partnership with Nike. So again, maybe you need to find companies that are impacted a couple areas here to kind of protect yourself.
Yeah, it's a harder time right now. I think a lot of it, had to do with maybe, taxes and that kind of thing and coming into play. This was the first time that I myself set a yearly goal, a yearly return goal. Because, a lot of us traders, we just trade. We're not looking at that year-end goal. And this is where I started even feeling it myself. As I was getting towards that goal and getting slightly above that goal, I was like, should I just end the year here? You have to think about that as a trader, because if that's your goal, you don't want to end up below your goal and you were above it, right? it's okay to maybe let that happen in June, but not let that happen right in November, right? And so this is a learning lesson for all of us. I mean, I'm learning from it myself, and
Yep.
it just goes to show me that, hey, there's certain points in times, especially towards the end of the year, that you might get that boost in the market where you get towards your end of year goal, and it is okay to say, boom, I'm going to take majority of my cash. I'll keep a couple positions on, but let's just be smart here. Risk off. We hit our goal, and let's take it. It is just something to think about, because I think that a lot of traders were probably close to what they thought would be an awesome year, and this just turned it around. And so for those traders out there, don't beat yourself up about it. Try to really learn from the lesson, and we can look into it next year. And if you're going to be a trader, you don't have to worry about it. You're probably going to be in this business for 20 years. So, I mean, don't stress too much about 1 year, but let's gain from that and let's grow from it.
Love that. That's awesome, Mitch. I like that talk of, have a year goal, have a month goal, right? I mean, I see some traders out there, talking about, on a month by month basis, right? And again, you're not going to have all green days. I mean, unless if you're that one guy out there, right, who claims he had, I don't even want to say it, hundreds, right, of green days in a row, right? But forget that. It's not going to happen, right? You're going to have some red days. You're going to have some losers. But know your trading plan, right? Know your risk reward. And, like Mitch said, pay attention to your own goals and a month by month and year by year basis.
Yeah, because at the end of the day, we all want success. We all want to get towards the goal, which is making money, right? And being consistent. One of the best ways to be consistent is, at the end of the day, if you can hit your goals, taking that and giving yourself the pat on the back, setting some new goals, and then going after it again. We're going to do the same here on Money Mitch. We're going to keep battling into 2022, whether we have, tough growth stocks or not. We'll find a way to trade, whether that means maybe trading on the short side. Yes, I dare say it. We might have to learn how to short. I took a couple shorts today on live trading. Zunaid went 2 shorts. I went short on Visa, and we did really good. So, I mean, at the end of the day, this is what we want to do, guys. We want to be able to have different strategies. So maybe you're going through a time right now where you did close some positions and you have some cash, you're waiting. This is a good time to maybe learn some new strategies. Look around. Find how maybe you can trade in this kind of environment if it sticks around into the next year.
Yeah, and Mitch, I'll follow up on that, right? So if you don't want to be, quote unquote short, or if you're newer and you don't know how to do it, this is where maybe you look at options, right? So like we just said, there is now an Ark inverse ETF, right? So Ark is a high growth. So if you think high growth stocks are going to get hit, instead of shorting them, you now can go long this ETF. There are inverse ETFs out there. And again, you got to know what they actually are, but it's a good way to maybe balance out or to bet against certain industries or high growth names. The same could be said, with put options, right? With the SPY. Again, you've got to know, what you're doing and your own risk reward. But there are ways to protect yourself. And again, it turns into, do I want to have, solid gains of maybe, the 1 to 10%? Or do I want to have, 50% gains, but also risk to lose 50%, right? Because you can lock yourself into those ranges and trade that way as well.
Yeah, and another thing is always understand that there is certain ways of hedging, and you can look into things like that to try to help yourself in environments like this. Clarissa asking, how do you short? I need to learn. So Tiny Pie actually gave some good advice here. Today on Benzinga Live, we had put it this way. They had a whole webinar.
Was that the Trade Zero?
Trade Zero. There you go. I forgot the name for a second. I was going to say Trade Station. I did not want to say that name.
I was like, wait a sec. Let's get this right.
Yeah,
Trade
let's get this
Zero.
Right. It's Trade Zero. Okay, Trade Zero. And the reason why they went on there and did that short, I'll say it from my opinion. They have a lot of easily shorted stocks. So they understand shorting. So they came on that show, Benzinga Live, to talk about what shorting is. I say you take a look at that. Then also go to live trading. We talked about some shorts there. And then just keep going with Benzinga. One of the things that I want to do on Money Mitch is I'll start explaining some strategies on the short side. One of my favorite strategies is called a VWAP fade. It's looking for a big bearish move out the gates and then a short off the VWAP. We'll talk about that. We'll talk about why I think it's a good a strategy, especially when you're seeing quick flushes, because what it usually means is that you're shorting into the strength, into that bounce, which gives you an advantage. It's kind of like longing into the weakness versus longing into the strength. But we'll talk a little bit about that on Money Mitch next week. So stick around, guys. We got a lot to talk about going into the next week and into the next year, because I think one of the things that I want to do is definitely look on the short side going into next year and give you guys the ability to kind of see how I'm going about it. So we'll keep going at it. Chris, like always, you guys can find him at Chris Catchy, Chrisopedia. This guy knows SPAC, space, betting, pretty much anywhere in the market. If you had a question, send it to my man Chris. I'm sure he'll get you the best answer he can give you.
Thank you, brother. Much appreciated. Always happy to join you here on Money Mitch. And guys, make sure you stick around. Benzinga YouTube. If you haven't subscribed, subscribe to the channel. Like this video. I mean, you just heard trade ideas from us, but most importantly, you heard education and how to play this market. So, you know, that's what this show's about. That's what Mitch is about. So shout out to the chat and everyone for tuning in today.
Definitely, guys. Thumbs up, thumbs up. We'll dumb it down a little bit. Don't worry about it. Hang in there. We all start somewhere. I mean, I remember when I first started and I first watched the day trading stream, I was just deer in the headlights.
Yeah.
I mean, it happens to us all, guys. Just start by learning little by little and always advancing your skills. I still advance my skills on the weekends to this day, guys. So I know that you guys out there can do the same. Last thing I want to leave off, if you guys like NFTs and you still yet haven't seen the roadmap, that's where Chris has been this whole time, guys. Go check out the roadmap. You guys will see a lot of projects about NFTs. I also like how you guys are doing a little mix-up show now, like talking about top projects, different projects, not just only interviews. I know I checked out one the other day. I was able to find a couple NFTs that I'm even taking a look at. I'm hoping to see, crypto find a little bottom here, but
yeah,
as long as that can happen, who knows? Next year, I need one for my profile. So
I know. We got to get you in. We got to find one that's cheap enough that you like. So we'll find one.
That show talks all about the floors. So go check it out, guys. We'll see you there.
Thanks, everyone.
So next week, guys, like always, have a great weekend. Stay safe out there and study. Build those skills. See you next time.